Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Good morning, everyone. Welcome back to another live stream. Hope you're doing well and hope you had a nice weekend. We are back. It is Monday, fresh week in the markets and a big week this week. You have two main catalysts, I would say, for those watching, markets in general. I think the big things this week are going to be CPI or just the inflation reports in general this week, which we'll cover and track on this channel. And towards the end of the week, especially for my index traders and stock traders, we have the earnings season starting out. You have some bank earnings coming on later this week. I believe it's JP Morgan. Let me see. Is it JP Morgan? Yes, we have JP Morgan producing its earnings report tomorrow. These are things that could really move the markets. So, indices will, the financial companies that are reporting their earnings this week will set the tone for earnings season, I think, going into it. Financials are an interesting player because, they're the ones lending money to all sorts of different entities. So them lending money, them managing, they do like wealth management, all sorts of different things that they do, the IPO world, mergers, acquisitions, all these things. How the banks are performing is a pretty good indicator in many ways of the economy. So we'll see. We're expecting some earnings this week from some big reporting names, and we'll have to see how that plays into the full picture. As you saw in the opening sequence there, if you're interested in getting funded this year, check out DNA Funded. They've got some really great offers right now. And with that promo code A1T20, write that down. Even if you're not at the place where you're ready to get funded right now, write this down. That promo code gets you 20% off all their challenges. So check it out. Update from BRTT says, from Fed's hammock, we are not there yet on inflation. It's important to stay restrictive on monetary policy. It will be interesting to see this week. We have, like I said, the CPI print. That's going to be a big impact to markets. Also, we just trailed out for profit on the DAX trade. So I am seeing my trailing stop get hit. So going to take a profit on this trade. Broke through resistance here. Nice strong closure, but then a couple red solid candles down. Markets themselves have been a little bit stretched here, so I'm not too worried about just taking some profits on the trade, closing out of the DAX position for a win. Nothing huge. I think this is like a 1-to-1 risk to reward. So, obviously we put the stop here. And to be completely fair, I thought this trade was going to be a loss. We were very close to getting stopped out, then ultimately reversed course before getting stopped out. I was able to trail a stop and ultimately closed for about a 1-to-1 risk reward. I will take that. I'll take that any day over losing 1R. DNA link hits 404 page. Stormcloud, thanks for letting me know about that. James, could you do me a favor? Could you check that link is working? And also, could you just also mention to Emily, I want to make sure that we just check that, because if there's a link that's not working correctly, James says it works. I just tried it. Okay. Yeah. Okay. Yeah. good to keep an eye on those things. If a sponsor link is broken, we definitely have to make sure we fix it. Boom. Thanks, James. Appreciate you. Okay, so anyways, taking a look here at the rest of the market, S&P 500 gapped lower here in the Sunday session. Gapped lower, traded sideways, regained a little bit of strength here, but still has yet to fill that gap completely, right? So we left a gap open. We'll see if the stock market wants to kind of rally into the open today, fill that gap, and then see what it does next. Path of least resistance on this is usually when you get a gap down, the market fades the gap, usually. Same thing with Dow Jones. You've got a gap here left open. The Russell didn't quite fill its gap either. So possibility that you do get a push into to at least refill that gap. Maybe from there you drop, but again, path of least resistance, I would think, would be a push up to that level. That's indices on an intraday level here. DAX also left a gap. We'll see if it starts to retest and fill that gap. But I'm, like I said, taking profits on the DAX trade this morning. Nikkei gapped but filled it pretty quick. Chinese stocks are actually up today slightly. Chinese stocks still looking pretty strong. Take a look at the VIX, up 6.22%. I would love to see the VIX get a little bit more of a push higher. I'd like to sell some premium this week if I can. Dollar index pushing higher here, just shy of 98 on the dollar index, DXY. I was listening to something yesterday, guys, on the dollar index this year. The dollar index this year has had its worst decline, I believe, in this short of a span of time in history. I could be wrong. 12.5% in 175 days. I guess that's a bigger decline here than it is over here. Let's see over here. There's 13%, but it's in 260 days. So regardless, the point is dollar index has been on a real strong downslide here recently. And there's been some interesting thoughts on the dollar index here recently, because the concept of dollar weakness for many people is this uncertainty around the US, right? Is the US going to maintain? I think the dollar is definitely going to remain, the strong, the safe haven currency of the world. But the bigger question is it losing ground on that gradually? We're seeing the BRICS nation. I saw something posted over the weekend that the BRICS community, right, that collection of nations, grew to, I guess, a record number of participating countries or something recently in 2025. So, all of this trade uncertainty definitely makes you wonder if the bigger theme here is a gradual pull away from US kind of dominance. But in my opinion, the reason I kind of check that at the door is our companies in the US are just the game players. The international Goliaths of services all over the world are mostly US companies. Netflix, Google, Microsoft. We're all using YouTube right now. That's an American product, right? So these multinational giant corporations ultimately are sort of the centerpiece to the financial system in terms of producing assets, right? So when it comes to the US dollar, is the US dollar going to fall to zero? My answer would be no, as long as you still have a robust consumer base in the United States. If you really want to make the case that the dollar is going to collapse, what is the dollar backed by? Ultimately, what is the US dollar backed by? The US dollar is backed by the US taxpayer. At the end of the day, the US taxpayer is why people lend money to the United States at all. The US consumer base we're the the wealthiest kind of spenders on the planet. We're a ginormous group of people that spend a ton of money, and we pay taxes, and we have a system, right, in which money gets collected. Now, again, we run at huge deficits in the United States. The national debt is growing over time. So that's maybe where a little bit of scrutiny has come into the US dollar here recently. But the reason the dollar is so strong on a on a big picture note against most currencies, and why US treasuries are still heavily sought after and owned by foreigners, is simply the idea that you have a very wealthy nation, taxpayers, etc. So if we're looking at the dollar from a longer term perspective, is the dollar actually a bargain at these levels? Are you talking about possibly getting buy the dip opportunities? I think from a long-term perspective, like if you're wanting to buy the dollar for the next 6 to 12 months, my personal opinion is I think you might actually be getting into this zone of longer term support. I know this is a huge zone, but generally dollar between 90 and 98 to me seems like a longer term area of value. That being said, when we narrow our scope and we talk about trading from a shorter term perspective, and when I say shorter term, I'm talking like less than 3 months holding periods, I see that the dollar still looks to me to be soft and could trend lower for, like, again, you may very well get a long-term move higher in the dollar, but we may be headed down to 96, 95, 94 first, right? So if I'm looking at the dollar right now, and I go and I say, okay, I want to get an idea of the US economic heat map, this is where I can't really get super short at this time. So let me be a little bit more actionable in the way I'm speaking, because I know it can be frustrating if you just hear like, oh, the bull case, the bear case, bull case, bear case. I'll share what I'm actually doing. I'm not shorting the dollar at this point. Dollar index to me doesn't really make sense shorting at current levels. We've sold off. The trend is very crowded. A lot of people are very, very much bearish on the dollar at this time. So for me, what would give me kind of the criteria to get short the dollar again on a bigger picture would be this week's CPI print. So this week we get CPI. And if CPI comes in really soft compared to forecasts, then it's possible that this would flip, this would stay bearish. If we got PPI to go bearish, if PCE, when that comes out, comes in bearish, I mean, if this thing starts to show real signs of cooling and rate cuts are like pretty imminent, then the dollar might flip into bear territory. But why are we so neutral on the dollar? Well, did you guys see the jobs numbers? They were strong, right? NFP beat expectations by nearly 40,000 jobs. Job openings in the United States beat by a pretty wide margin. We have 7.77 million job openings in the United States, showing some aggressive willingness to hire. JOLTS job openings, initial jobless claims came in better than expected last week. They cooled off again. And unemployment rate went from 4.3% down to 4.1%. We're talking about low levels of unemployment, high job hiring willingness. So to me, it's like, how can I get super short the dollar with a strong employment statistics, right? Does that make sense? So that's my theory on the dollar. That's why I'm completely neutral on the dollar. That's why I'm not shorting the dollar aggressively, and why I'm waiting for clarity through CPI this week. So, Nick, not sure if you noticed, but the Canada heat map employment change data hasn't been updated. Oh, you are right. I'll look into that. I'll write it down now. Thank you for the heads up. Let's take a look at top setups overall here today. NASDAQ still getting really strong readings. Kiwi yen, is this one pulling back? It was sort of down overnight, but I don't think it is anymore. Yeah, so we're down a little bit. I'd be interested in possibly getting back into my Kiwi yen longs if I can get a pullback on this pair. NASDAQ. NASDAQ's been same story for a while, just trending higher. no rest for this one, just keeps going higher and higher, which is great for my Russell position, which, typically indices tend to move together. So we've got a nice, data's fine. It's just the date that needs changing. Yes. I appreciate that. Thank you for letting me know. Believe it or not, a lot of times if there's any data discrepancies, you got to understand there's a ton of data that comes in for the EdgeFinder. So any discrepancies, please feel free to share them, and usually we get them sorted out within a few hours. Nick, can one trade ETFs in a DNA funded prop firm challenge? I actually don't know, Raphael. That's a good question. I don't think you can, but to be honest, if I could trade the CFD variations, I would. I just can't. In the US, with a US regulated, brokerage account, I can't trade XAU USD or NAS 100. I can't trade those things, right? So I have to trade the ETF equivalent. I like ETFs. They have low holding costs. But if I could trade CFD variations, would I? Possibly. Depends what time frame you're trading on. If you're trading like 4 hour, 1 hour, 15, CFDs are probably the way to go. If you're trading daily or higher, ETFs, in my opinion, make more sense because then you're getting way less holding costs. Pros and cons to everything, man. What's up, Bulent? Good to see you. Nick, so this means that while private sector is reducing its workforce, while the public sector has increased its workforce, right? Yeah, great read to that, Bulent. So if I take a look at U.S. economic heat map, you're pointing out that the ADP, which is private payrolls, came in really soft, but NFP, which is everything except, farming, huge upside hiring. So some softness here, some strength here. This is why, neutral positioning on the dollar makes sense to me right now. And that's also why the dollar itself has actually been kind of ranging here recently. Yes, you had a little bit of a breakout here, but look at the difference in movement. Look at the difference in movement recently. We went from these types of moves, right? Look at the distance. Look at the distance traveled in the dollar to now you're talking about these like little bitty moves back and forth. So I think dollar index is really gearing up for CPI, and we'll see how that impacts things. Also, if you're enjoying the stream, make sure to hit the thumbs up button. And if you would like access to the EdgeFinder, do not miss our 45% off sale discount right now. I also saw somebody in the chat here earlier that said they were really bummed that they're going to miss the sale because they don't have the funds right now to purchase a copy of the EdgeFinder, but they really wanted to. Just so you know, we do offer payment plans. If you are interested in getting 45% off, but you feel you can't afford it still, split it up into a payment plan. Send us a direct message. We'll help you out with that. Our support team, I have 3 wonderful people on my staff who help out with all sorts of different customer needs, answering questions, setting up payment plans, setting up trials, all sorts of things. If you want the EdgeFinder, but money is a problem for you right now, do not hesitate to contact us. We will help you out. We'll split it up into a payment plan for you. We'll keep you informed on the next available sale if you need to. But one of the smartest things, if you're somebody who's watching the stream right now and you're like, I know I want to get the copy of the EdgeFinder, I'm telling you transparently, the best way you can get a copy of the EdgeFinder for the best possible price is to use this link that just got dropped. Send us a direct message. Let us know your situation. If you're like, I need to split it up into 2 payments or 3 payments, we can do that for you. But just send us a direct message. I saw somebody earlier who literally was like, I want to copy the EdgeFinder so bad, but I can't afford the full price. And I'm like, just send us a DM. We'll get you hooked up. We'll split it into 2 or 3. Again, I've got a great staff who helps people all day long with that sort of stuff. And they'd be more than happy to see if they can make something work for you. So don't miss it. It is the lowest price that we do offer all year long. So if you're like, I don't want to miss the discount, send us a direct message. Let us know what you can do, and we'll try and make it work for you. Nick, what about gold price? Yeah, let's take a look. Solomon, I think you were the one who I saw. Yes, send us a message. Send us a message. We'll make it happen for you. If you want to copy the EdgeFinder, you just don't have the full funds right now. I'm telling you, we want your business. We want to make it work for you. The tools are amazing. We've got people all over the world using them. get yourself a copy, split it into a payment plan, whatever you need to do, but send us a direct message. Nick, why are you not watching your messages? I am just, there's a lot of you guys and there's one of me. So I'm doing my best. I know you asked about gold price. Trust me, we will always be looking at gold prices on these streams, and I'll get to it in just a second. Top setups. Let me also just really quick, little recap on the COT data this week. So what did they do this week? Well, I would actually say that a lot of money flow actually was a little bit bearish. So you did get the NASDAQ buying up a little bit, but so here's a risk off move. There is accumulation of the Swiss franc, right? Dollar was pretty mixed. Gold was pretty mixed. But what stood out to me was that you had this, right? You had the Dow Jones getting sold pretty heavily, SPX getting sold pretty heavily, Russell getting sold pretty heavily. So there was a little bit of rocky selling in the COT reports. Take a look at COT history. I think this context is important. Dollar index seems like institutions continue to sort of unwind and stay bearish on the dollar at this time. We've seen that. This yellow line is really what you want to look at if you're looking at the COT data history, right? Trend is moving lower. Let's take a look at gold here from a big picture. You can see there's kind of a rise going on in gold accumulation here from institutions. Nothing new. That's been kind of the case for the last few years. Gold bulls from the institutional side. Let's take a look at SPX. Take a look at SPX here. You can see still pretty cautious, pretty bearish on SPX. On NASDAQ, however, it's more bullish, I think. Yeah. It's not by a lot, but you get 61% of positioning on the bullish side for NAS. So there's a little bit more bullishness. And last one is Dow Jones. What about Dow? Dow, what we can see here is that there was a big surge in bullishness, and now we've seen a little bit of selling in Dow Jones positioning. So interesting. How do you handle different EdgeFinder readings between correlated assets like EU and GU? Samuel, good question. So even though the euro dollar and pound dollar are correlated, that does not mean that they are linked and have to move directionally the same all the time, right? The reason they're correlated at all is, of course, because they share similar geographic, positioning, as well as some similarities in their economies. And the biggest one is because they both share going against the US dollar, right? So, but that does not mean that Europe and the UK are set to be on the same path. So if we're looking at, for example, if I want to look at EU, we actually have some differences in the euro versus the pound, right? So if I take a look at the EU economic heat map, we actually have a lot of strength here currently for Europe. And what that means is that relative to forecasts, Europe has been outperforming expectations. They had a big upbeat statistic, 0.6% growth GDP compared to the forecasted 0.3%. It's not bad, right? That was for Q2. Or is that for Q1 final? I think it's Q1 final. So, came in strong. Then you have PMI numbers came in a little better than expected, both services and manufacturing, right? Retail sales were better than expected. Inflation came in as expected, 2%. So then if you compare that and you look at the UK economy, this has actually been missing a lot of expectations here. Once this loads. If it wants to load, it's not loading our impact, but you can see 1, 2, 3, 1, 2 bullish. So slightly leans a little bit bearish here. And if we take a look at like GDP statistics, GDP came in soft, retail sales came in soft, PPI. So we're getting a 40% reading, which means 40% of our indicators are bullish. The rest neutral or bearish. Bitcoin to gold ratio is crazy. Let's look. So if I take a look at sentiment right now, Bitcoin to gold ratio. Ooh, look at this, guys. Bitcoin is absolutely killing it here compared to gold. I mean, look at Bitcoin right now. Bitcoin's at 122,000. That's crazy. It's just ripping higher here. Fresh all-time highs. To me, again, this is sort of a risk on indicator. And so big strength in Bitcoin, especially versus gold specifically, right? Gold is up a little bit. Bitcoin's up a ton, right? I mean, if you had bought the lows here, you're up 25%. If you'd bought the lows here, you're up at the most 3.92%. So Bitcoin's absolutely ripping. Ethereum's also up 2.4. Doge is up 2.8, right? You've got crypto in general doing really well here. US stock market's just about to open up. Stocks retaking some ground here as we speak as well. Here's NASDAQ, here's Dow Jones, SPX, and Russell, all of them moving higher here in the pre-market with 1 minute to go until the US stock market opens up. So we'll see how all that plays out. UJ shorts look good. Let me look at UJ. USD JPY. Where is it on this list? Am I blind? I think I'm blind. Hold on. Major currency pairs. USD JPY getting a neutral reading. Probably would be one that I'd pass on personally. Dollar Swiss looks really bearish here. Even euro dollar at +5 is looking like it's sort of soft, right? Kiwi dollar +4, dollar CAD +3, pound dollar -5, still kind of soft. If pound dollar actually starts to, look at this, pound dollar coming down pretty good here. If it breaks through support, if you get some kind of move like this, then there's a possibility that pound dollar shorts actually might start to look attractive to me. I'm going to watch this really close this week. If we can get a failure at support here on pound dollar, that could be a really interesting short setup for me. Bulent just said, I just made 10% of my account just from Bitcoin's move, trailing stop loss on Binance. Bulent, good for you, man. That's awesome. Congratulations. That's a really good trade. I'm jealous. That you get this kind of price action, these types of moves, right? Those types of moves for me, those are like once or twice a year kind of trades that I'll get. I had that earlier this year on gold, right? I had a very, very good trade on gold. It was my biggest winner realized to date. However, the Russell position has taken the #1 spot as my biggest winner this year. I bought over here, good sized position for me. And the thing just has kept ripping, and I've trailed stops multiple times. The Russell 2000 index, it's kind of another index like the SPX, NAS, Dow. Russell is just small cap companies. It's a huge list of a bunch of smaller companies. Still plenty of great companies, plenty of, in my opinion, the Russell could really be set to continue to rip higher here this year. If you get a couple rate cuts, especially, that really starts to get attractive. But also a lot of the Trump administration stuff, I think, actually kind of favors small caps in some ways. You know, all the proposed spending, I think, could actually benefit some of the areas that the Russell is heavy on. Specifically, the Russell is comprised heavily of financial companies, healthcare companies, right? So there's all sorts of, I think, some disproportionate stuff that could really benefit these companies. So again, I continue to trail stops on Russell. It's my biggest winner this year. If it trails me out, I think it will still be a bigger winner than gold. If it keeps ripping, it will be easily way bigger. Tesla's hot today, Nick. Don't even tempt me with a good time. Oh, heck yes. Oh, heck yes. Russell, Tesla. Yeah, today's a good day. Tesla is an ongoing campaign that I'm not going to talk about too much on this channel. I have a stock channel where I talk about it, but I have a good sized position in Tesla, and I am looking to actually short calls at the 375 strike price So with this price moving higher, I may actually be able to get the premium that I wanted to get out of shorting those calls. So I may look to sell calls on Tesla today if I can. We'll keep an eye on it. If I make any position changes on anything, gold, Russell, Tesla, all of it will be inside of our signals room. If you're not in the signals room and would like to be, click the link here in the chat. We'll send you a spot where you can direct message our team. If you're interested in signing up for our signal service, you can see every trade I take on a regulated US account. I share all of it. So if you want to see the trades that I'm taking, when I'm taking them, click the link being dropped in the chat to speak to our support team about getting set up with a membership. Russell, NAS, SPX, all in the positive now. Looking good. Because you, man, I'm using my strategies, learn from you. You are one of my mentors in my lifetime. Thank you, Nick. Belent, I appreciate that, man. I'm glad to hear you've got a really good trade running on Bitcoin. Stay patient with it, man. That's the biggest thing I can say. You do whatever your strategy is, but here's the thing, right? I'm in the same camp. Like, I don't have a Bitcoin trade on. Again, props to you, man. I am jealous of that trade. Bitcoin, I've caught some really big winners on Bitcoin too. Ooh, Bitcoin, when you catch the right move on Bitcoin, thing does not mess around. It is like, the thing is, right? Some people really don't like things like gold or yen pairs or Bitcoin or NASDAQ. Why do people not like those things? Well, in my experience, there's two reasons. First is really, really obvious. A lot of CFD brokerages have big contract sizes on things like NASDAQ, gold. So even with a 0.01 lot size, those things can be really big in your account, right? So people don't like those things because they've crushed them in the past. They've blown accounts for them in the past. I get that. That makes sense. The other reason people don't like that, from my experience, from my humble opinion in doing this for as long as I have, the reason a lot of people don't like yen pairs or gold or NAS, etc., is because when they trend really hard. And a lot of people try to fade trends. And so they'll be stuck in a short position on gold that just keeps going up and up and up and up and blowing their account, right? So I think a lot of people don't like those things because when they trend against them, they hate them, right? They're like, screw this thing. This thing's so terrible. But when you actually learn to ride trends, when you actually start getting in the direction of fundamentals, when we start to align with those moves and ride that wave as long as it wants to take us, we start to love those things. So a lot of us actually probably love trading gold. We probably love trading Bitcoin, but depends who you ask and what their strategy is. I'll tell you right now, there's a good chance that if you're somebody who fades trends, you do not like gold, you do not like yen pairs, you do not like the NASDAQ. If you're somebody who rides trends and trails stops, let me tell you this, you probably like it. If I guessed correctly, type yes in the chat. If I guessed your stance on it, right? If you trade reversals, if you trade support and resistance, back and forth movements, you probably don't like gold. You probably like currency pairs. You probably like something that moves a little bit less insane. But if you're a trend follower, you probably like those things. Is that you? Type yes in the chat if that's you. I'm just curious if that, because that's for me, right? Like, I like gold. I like yen. I like NAS for trend trading setups. I do not like yen pairs for reversal trading, right? So I'm completely in line with, I think, a lot of people's experience with these things. Like yen pairs, you do not want to mess around. There's a couple trends you don't want to mess around with. You don't want to mess around with a NAS trend. You definitely don't want to mess around with a Bitcoin trend. You definitely don't want to mess around with a Japanese yen trend, right? These things are graveyards for people who try and trade heavy against them because they move so much. Look, I am more of a mean reversion trader in currencies. Like, I'm looking for back and forth movements to make money in currencies. I don't like yen pairs typically. I'll still trade them sometimes, but the reason I don't like them is because they move so much. This move on the dollar yen, this is a 2,000 pip movement. a 13% swing in the exchange rate between these two currencies. It's an aggressive mover. So aggression can be good, but it also can be really devastating if you are trying to trade ranges, right? So if I was looking at yen, if I was bullish on the yen, for example, I'd look for something like this. I'd look to trade this range. But I don't like that sort of style because on the Japanese yen specifically, because the yen, when it trends, if you're on the wrong side of it, it can be very, very painful, right? CAD Swiss, I'm still stuck in 2 long positions on this one, but this is the reason I like this currency pair. It doesn't move that much. This whole huge move, right? Huge move, 600 pips. From a longer term position trader, that's very, very workable. These positions are very tiny in my account. In terms of a mean reversion strategy, I don't mind the idea of holding, see if I can get a big bounce or a bounce at all to close out of CAD Swiss. Same scenario in Euro Pound. This pair moves very little. It's not a big mover. So if I pull up Euro Pound, right, I have a couple short positions that I think longer term, I think these will play out. In the short term, might squeeze higher, but I think that over time, look how this pair typically moves. And you can see most of the time it shoots in both directions. So I have small shorts here, here, and here. And I think that the bigger picture is we'll get some reversals. Nick, when are you going to do a year-to-date performance video? Bashy, it's on my homepage. I did one like a couple weeks ago. I do them every few months. Russell's still pushing higher here. As long as we hold this support level, I'll stay in the trade. Looking solid so far. I am going to have to check again on Tesla. A little bit of a reversal here. Look at this 30-minute chart. Tesla shot up, pulled back. You want to talk about a crazy trend mover? Tesla stock. Craziest trend I ever rode in my entire life was the Tesla move. I bought Tesla in March of 2020. To this date, on a percentage basis, it's not even close. This was the best trade of my career. I bought Tesla, and I just rode that trend. Ultimately closed out somewhere over here. I can't remember exactly, but it was like a 900% gain or something insane. Best trade I ever had. And it was very contrarian to get started, kind of. I mean, it ran up, right? If we just go back really quick, Tesla 2020, it dropped hard. It dropped hard following all of the, COVID pandemic stuff. It dropped really, really hard. It came all the way down to this level of support. I remember marking this up 7,000 times. And I said, okay, I think we could turn around here. I didn't catch the exact bottom, but I did buy some shares and it just absolutely ripped. Do you drive a Tesla with the profits you've made? It's a good question. No, not a big fan of fancy cars. Personally, I'm not taking away at all from people who do have cool cars. I just don't personally. I'm just not a big car person. And I think it's not something that I, put it this way. I took the profits I made from Tesla and I just kept trading them. And to be honest, I'd rather it be my trading account than on the road. That's the reality. The thing is, I love the game. Okay. I love the game of trading, investing. I love the idea of compounding and putting it back in and just keep rolling it over and investing it, trading it, scaling it up over time. Will I buy a Tesla someday? There's a possibility. I really do like the cars. I think they're really cool. Maybe someday, but at this point though, at this point it's weird. I feel like buying a Tesla is almost now, actually, this is not weird. This is part of stock market analysis stuff. Buying a Tesla in some ways, I wonder, is it like a weird thing because people dislike Elon Musk so much now. I feel like there's a lot of people who boycott buying Teslas for that reason. But I've always liked the cars. I think they're so cool. the technology in them. I rode in an Uber like years ago, or not years ago, but it was like a year ago, I think. And he was like, he had some super early self-driving thing. This might have been 2 years ago. I can't remember exactly. But it also, if you just look at the like the camera technologies in there and you can like watch all the cars around you and it's seeing people walk across the road, it's really cool. Again, I think the technology is phenomenal. I think it's very cool. The robotic stuff going on at Tesla that I think is coming is longer term, but a very cool. Autonomous driving. I think that the robo-taxi stuff, it's all very, very exciting. Silver, you guys seen silver? Silver's breaking out here again, pushing higher here today. Is silver a bullish setup on the EdgeFinder? Nope, neutral. Let's see, what is not neutral today? Let's take a look at this. I'm going to look at currencies in a second, but I'm going to take currencies off in terms of only our metals, indices, crypto, commodities, and bonds. Currently, our bullish setups are still bullish in the DAX, so I'll keep an eye on this, see if I can get back in it. Dow Jones, NASDAQ, UK 100, or the FTSE. So that is sort of my, if barring currencies for a second, that's my watch list for the day. If I go to eco only and I just select, I just want to look at major currencies and minor currencies. NZD CAD, this one moved against me. I'd be interested in possibly building a bigger position on this one. NZD USD getting a bullish rating is very interesting as well. Euro Aussie, what is Euro Aussie doing? Let's see. Last I checked, it was trending higher. Euro Aussie pulled back a little bit. This one could be an interesting one to watch. Euro Aussie on the long side. Euro CAD. Euro CAD looks pretty interesting too. A little bit of a pullback into this 1.59 level might be interesting. Aussie Kiwi, I already have a short position on this one, but I may get a chance to add a second trade here. Yeah, if we can get a push up into this area, this would be a second trade for me. I'd like to get a second position on Aussie Kiwi. That's going to be it, I think, for now. In terms of currency setups. Let's take a quick look here at put to call ratio as of Friday for SPX. Kind of middle ground. Sentiment's a little bit neutral here. Let's take a look at something else, though. Let's look at gold put to call ratio. High call demand. People are bullish on gold right now. Let's take a look at silver. Silver, people are also very bullish on silver at this time. Dow Jones, people are pretty neutral. NASDAQ, people are actually sort of bearish. Let's take a look at the NAS one more time. It's a lot of piling up on the sell side for NASDAQ. Could actually, I hope we get a little bit of a pullback. NAS might be interesting. Let's quick look at sentiment here. Let's take a look at retail sentiment here. Specifically, I like to look at this for major currency pairs, and we'll look at minor currency pairs in just a second. If this wants to load. All right, never mind. We're just going to look at the main one. Okay, so if I take a look at this in terms of market sentiment. Now, this contrarian signal, what this means is that if you get a 60% or greater one way or the other, it produces a contrarian signal. So as a quick example, right now, if we look at euro dollar specifically has a 66% short bias by retail traders. So retail is short the euro dollar, suggesting 63%, I'm one off, Sorry about that. So 63% bearish perspective, 37% bullish. So this gives us a bullish contrarian signal on euro dollar, contrarian to the crowd, right? To the crowd sentiment. Dollar yen's neutral, Aussie dollar's neutral, dollar CAD's neutral, Kiwi dollar's neutral, dollar Swiss. This is a really obvious one. So dollar Swiss continues to trend lower here. Crowd sentiment is very bullish on dollar Swiss, giving us a contrarian bearish signal. So look at pound dollar. Yeah, pound dollar is going to be neutral, about 50-50. Taking a look at euro dollar. So crowd is very bearish on euro dollar. So to me, that would be an area to scoop it up around the 116s, 114s, 113s. I've talked about that for a while. Let's see if we actually get a pullback on that front. We'll see. By the way, I mentioned this earlier, EdgeFinder is 45% off. If you haven't heard, it is our biggest discount price of the year. We're doing our summer sale right now. If you have some interest in getting a copy of the tool before this sale ends, we'll drop a link here in the chat to where you can get some information about this. And I mentioned this earlier, but if you are somebody who is like, I really want a copy of the EdgeFinder, but the price is outside of my budget right now, we do offer discounts or we do offer payment plans with the discounted price that we're running right now. So if you'd like to split it up into 2 payments or 3 payments, we can do that for you. You just got to send us a direct message and speak to our support team. Sometimes people are like, oh, I just can't afford it. Split it into 2 or 3 payments. If you really want the tool, this is your chance to get it for the lowest cost of the year. It's 45% off right now. Send us a DM. Use this link to chat with our support team. Let them know that you're interested in the payment plan option, and we can get that set up for you. And if you have any questions about it, feel free to chat with the team. Let's see. What are stocks doing now? Look at this. Russell is such a beast, man. Such a beast. Even if this trade trails out, like even if we reverse and move lower today, Russell has been putting up a show, man. This has been such an impressive. This is like the perfect uptrend in my view, because it's not like it's not doing this, it's doing this, right? It's just grinding higher. To me, this is like the perfect for my strategy. Like this is perfect because what I'm able to do in this, I put my stop here, and then I've just gotten these breakaways, and then I can trail stops, right? So breakaway, trail stops, breakaway, trail stops, breakaway, trail stops, breakaway, trail stops, right? So it's given me the opportunity here to have a very easy to manage position. I said this one Monday ago, 7 days ago. I said my job this week is to trail stops on the Russell. It is the biggest job that I have to do again this week, is to manage the Russell trade. I have other trades too, but the Russell is the biggest by far in my portfolio at this time. It had a bullish reading when I took the trade. It no longer does. Russell's got a +4. So it is still in the trade, or is still in. And this is why I don't, just because the EdgeFinder drops from like super bullish on something to neutral is not enough for me to close out the trade. I manage the trade, right? So I'm trailing a stop. I'm letting price action at this point tell me when it's time to get out of the trade. If we reverse course and move lower today and we stop out, then the stop trail will have resulted at this point in a move of, that would be an 8% gain on the account, which is a huge move. So if we get, if we get another push higher, let's say we get something like this, then what I'll do is I'll trail that stop again and lock further in on the trade. But I don't know where the Russell ends. I'm just trailing stops. I think there's a lot of positive things for stocks out there right now, and I don't know how far they want to run. So I'm not going to try and call a top. I'm just trailing stops. Hey, Nick, the COT data has been showing selling the RTY or the Russell. Why are you still expecting short-term longs? Samuel, so yeah, so it's a great question. Like, totally fair question. COT shows selling. Why are you still long? And a lot of times we get that question because a lot of times people, they really love the COT report. And I get it. I do too. Right. But the COT report is not the end all be all, the only thing that I consider. There's a lot of reasons I really like the Russell. For example, I think we're going to get rate cuts this year. The Russell is small cap companies that lower borrowing costs would really help. Additionally, I think the jobs market looks okay and you got cooling inflation. It's a good environment for the Russell. So even though institutions may have sold a little Russell here, right? In fact, they're very bearish on the Russell. First of all, institutions are not always right, believe it or not. However, even if they are bearish on the Russell, it does not mean that that is the only thing that I look at to guide whether I'm bullish or bearish on something. In fact, I would actually discourage you. There are a lot of people who do this. So I'm just fair warning. There's a lot of people who just say, look, institutions are they're bullish on yen. So I want to be bullish on yen too. And there's a lot of people who do that. And that's cool. But to me, I think there's more to look at than just the commitment of traders data, especially when you understand that, okay, you want to be, let's do an example. Ready? A lot of people, Swiss franc, Japanese yen. You ready? Here's why looking only at the COT data is not a great idea. It is a useful tool. Do not get me wrong. I love the COT data, but it's not a holy grail. If we look at the Swiss franc and we said, okay, we wanted to short Swiss franc with institutions, we wanted to buy Japanese yen with institutions, right? That's what the institutions are doing, right? Here's Swiss yen. What did we say? We wanted to short Swiss franc and buy Japanese yen. Do you see what I'm saying? That was a really poor thing to try and copy your way into, right? So while institutional data is useful, institutions also are not the same as you and I. They may have shorted a little here and 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 shorted a little here. And they may be playing for a 6 months out reversal in Swiss franc against the Japanese yen. This may be how they ultimately play the trade. So COT data is good for a big picture, but it's not great for like an instantaneous, oh, every day it's going to go in the direction of COT. It's not like that, right? It is a useful tool. It's something I consider. But if we look at the top setups, the way this page is laid out, notice that only one column is COT data in consideration. All of these collectively matter way more to our scoring algorithm than the commitment of traders data. Now, again, some traders really prefer to only look at the COT report, and that's great. You do your thing. But for me, COT data is just one piece of the puzzle, right? Institutional positioning is important, but it's not the only thing that guides the trend. Does that make sense? That's my thought. See you, Bashi. Thanks for stopping in, my friend. Nick, what do you think about risk sentiment? What should happen so we fully go risk off now? Tariffs, retaliation from EU and others. Risk sentiment. So in terms of the market itself, people seem to have really shrugged off risk. In general, our risk on sentiment is going strong now. Look at this. Investor sentiment survey shows us 45% and 41.4%. The latest filing shows 41.4% of respondents to this weekly survey said they're bullish on stocks. It's not huge, but it's a lot more than the 20% that we were getting a couple of months ago. People have gone from Trump's going to ruin the world to Trump's going to do just fine and it's not a big deal. That's like the sentiment. Or maybe they're not saying that. Maybe they're saying Trump's just going to back out, right? Depends. It doesn't matter. It doesn't matter if you like him or dislike him. It doesn't really matter. The market has said Trump's going to ruin everything to is not going to do much. suggesting that they think markets are going to go higher. So that's the new perception. We also see that in the Bitcoin to gold ratio, right? Keep an eye on your risk sentiment tools. If you have them in front of you, use them. They're important. Market sentiment is very frothy, in my opinion, at this time. Crowd sentiment, very bullish on stocks, very bullish on Bitcoin, very excited about taking risk. And in my personal opinion, you also have, by the way, VIX readings very, very low. So the market, in my view, is very optimistic and enthusiastic about risk. Now, where that poses a problem for me personally is when it comes to sentiment, I'm very much a contrarian to kind of crowd sentiment. So by that definition, that makes me a little cautious. Now, when you get like a breakout and things start to be flipping in sentiment, that's a bullish signal. But when they start to run hot for a while, then I start to get a little bit more, okay, I want to be defensive, right? And so when I look at this, when I look at the Bitcoin to gold ratio going crazy, AAII investor sentiment survey showing participants in the market are feeling bullish, stock market at all-time high. What do I do? VIX down in the 17s. What do I do with all that? Well, for me, I sit tight. So I have a bunch of stock positions that I own. I'm selling covered calls on a bunch of stocks that I own. I'm looking at the S&P 500. I'm saying I can't buy it up here. If you give me a dip in the next few weeks, I could probably take a long, put a stop on it and see what I can get out of it. But for now, it just means trail stops on my winners, sell covered calls on stocks that I don't want to own forever necessarily. And just sit tight. To me, the risk reward becomes a lot more attractive when you get a big high VIX and pullbacks, etc. And Nick, I spoke to Hallie about your signals channel. She gave a good discount. Hopefully I can join there soon and get the EdgeFinder. Awesome. Yes, Glenn is correct. You can bundle them. If you want both, just speak to our support team. They'll get you the best discounts you can. If you need the link, we'll drop it here in the chat to where you can get set up with that. Also, need to check our schedule here today. Do we have Chris today? I thought we have no Chris. Chandler and James, let me know if we have Chris coming on today or not. Chris is coming? Okay, cool. Good deal. All right. Let's take a look at some stocks here really quick. PayPal's up 3.5%. Very nice. Fortinet's up 2.6. Hood, my goodness, this thing just rips to no end. $100 a share. Airbnb up 1.4. I guess I gotta, did I sell calls on my, hold on. I gotta look at the stock side of things for a second here. Did I sell calls out? Yes, I did. Very nice. Okay, so sold calls on Airbnb. Also have to do this really quick. This is going to drive me crazy. What do I want to do? I want to go menu bar. I want to put this back over on the left. I want to, actually, I might be able to just, hold on. I saved a template for this. I saved it as main 2. There we go. Oh, that looks so much better. Oh, that was driving me crazy. Anyways, taking a look here. Quick look at some of the stock scenarios here. So Hood is driving me crazy because it's a stock I love. I'm up 150% on this position now. But the problem is I've also sold calls for the $95 strike price. and the stock keeps going up and up and up and up. And so I'm stuck in a position where I'm short calls, but also long the stock. It's a covered call that I've rolled twice now. Stock looks a little overbought in my view. I know we're switching gears for just a second. I've run through a little bit of everything when it comes to indices, commodities, and currencies. So I'm just taking a look at stocks here as well. Tesla trade. What can I get out of Tesla? Let me just see. Tesla options. If I want to sell a call on Tesla, 375 calls. Calls, sell, just 2 contracts. Yeah, I mean, I'm getting a lot of premium here out of this. There's a Tesla earnings in there somewhere too. 375, August 15th is a month out. So for selling the calls here, I would get $5.90 per contract. I'd collect, this is how the P&L would look. Collect $1,200 for this. Yeah, if Tesla squeezes higher again today, if we like make a push through the highs or a recapture of those highs, I may look to sell those calls that I've been waiting to do. This would be, so the 375 calls would give me upside in the stock. So even if the stock moves higher, I have 400 shares, right? I want to sell half of my position, but I only really want to sell half my position if we get a squeeze higher. So the way I'm looking to play that would be the 375 calls. I want to short 375 calls. Also, James and Chandler, I have this on my notebook to ask you guys to do. Could you ask Emily really quick to send you the new Webull link? We have a new Webull link specifically, which is like special sign up offers that have been set up for our community here. If you could ask Emily really quick to send you that link, that way we could share it with the audience. But we have some new special sign up perks with Webull, which is really exciting. Webull is a brokerage that I've used for years. It is amazing for stocks and options. As far as I'm concerned, it's the best one out there. I just love the platform. It's so clean. So anyways, yeah. Once you have that new link, if you could drop that in the chat, that would be awesome. Anyways, Russell's holding its gains here. Chinese stocks. It's tempting, man. Once you get into melt up mode, it's hard. I've played this game for like so long now where markets enter a melt up mode. Everyone feels that FOMO, like, oh, I want to be long Bitcoin. I want to be long altcoins. I want to be long, Tesla and Nvidia and all these things, right? And then all of a sudden it's no longer popular and the market starts dropping. So to me, it's like, the risk reward here is just not super attractive on things like Bitcoin or stocks. Again, I think that they can continue to go higher, but it's all about risk to reward, right? It's all about how much am I risking versus how much can I stand to gain out of being in these positions. Do you see a scenario where the Fed raises rates? I do not see that at this time. No. I don't think the Fed's going to hike rates. Now the Fed may hold rates, but the probability of the Fed hiking rates, I think, is really low. The only way the Fed would hike rates would be if inflation. Awesome. Thank you guys. Perfect. You guys got it. Yeah. James and Chandler, if you guys could just save that to your default, I got to do the same on mine, but that's the new Webull link. Yeah. So if you guys are interested in Webull, check them out. It's my favorite brokerage for stocks and options. Is Webull usable outside of the United States? I'm going to give you a yes kind of answer. Some countries, yes. And also there are certain restrictions in certain places on like options or ETFs. So I'm not going to be able to give you like an easy yes, but Webull does service other countries to some capacity. So you can explore that by clicking that link and seeing if it's an option for you. Why the fall in gold? Gold's flat on the day. So no movement yet on gold. If you're talking about like a low time frame, I don't know. But bigger picture, daily chart, gold's still range bound, pretty indecisive. And I've been looking for an opportunity to trail stops on gold. I'd like to see a strong closure above today. If we can get a push to the upside, then I may actually be able to take this stop loss and trail it in. Talked about doing that on Friday, but we did not get enough of a strong closure. And I just don't want to I don't want to preemptively trail stops. This thing's very choppy. I think it would be better for me, or I don't think, but like my strategy tells me, okay, wait for strong breakout above in order to trail a stop. Is it possible to be profitable swing trading indices through CFDs with insane swaps? Giovanni, that's a really great question. So I don't know exactly how much swaps on a CFD brokerage play into swing trading indices, because that's never something that I've really done, right? Because I'm in the US, so I've always traded ETFs, and I've always traded, I don't trade futures. Not that I mean, futures are great, but specifically to what I do, I've found that ETFs are the way to go for what I do, because it just doesn't cost me very much to hold positions. I can hold a trade in Bitcoin, or I can trade, and I'm not actually holding Bitcoin, right? I'm holding IBIT, which is an ETF that tracks Bitcoin. I can do that in a way that is very cost effective to just hold the position. I mean, I wish I was long IBIT, but I'm not, right? But I can trade like IWM, which is what I'm holding right now for the Russell trade. It's very inexpensive to hold this trade. So yeah. So I'm not sure. I think that my opinion is that if you're a swing trader on indices outside of the United States, you might want to look into futures, but futures still have holding costs too. Yeah, the downside, huge downside for ETFs, and this is a downside. Trust me, it is a downside. Gaps can be very frustrating, because I have had positions in the past where I'll tell you guys an example. This ruined my outperformance last year. My fault, nobody else's fault. Listen carefully when it comes to whose fault is this. It's my fault. Every return, every dollar that goes up or down in your account, or pound or euro or whatever, is 100% on you. Always. So I'm not making any excuses here. But last year I had something very frustrating happen. Again, I'm not putting blame on anything, but I had something really frustrating that happened due to trading my selection, my choice of trading ETFs. Last year, I had a really big position on the NASDAQ. Again, my choice. I bought the NASDAQ during this pullback, and I was long. And then on a Friday, this candle right here, we gapped lower, and I was like, okay, my position is underwater, but my stop loss was like right there. So my stop was right below. You can see where my stop is, right? You can see where I put my stop. My stop was right below this level. And so on the following Monday, what was already a position in drawdown became sort of a nightmare scenario where I end up losing a big chunk due to slippage. Now, actually, I should back up, and futures didn't save you here either. Or even for that matter, CFDs wouldn't have saved you in this matter either, because the market itself, the futures market, gapped lower. And anyways, QQQ, the following morning, I gave up a huge amount of my profits for the year to date at that point in August of last year due to slippage. gapped down. The market, I couldn't even trade the market until the stock market opened up multiple hours later. So I ended up giving up a huge chunk of my profits last year, and ended up slightly underperforming the S&P 500 this year. Last year, I'm sorry. This year I'm doing quite well. Last year I gave up a significant amount of my outperformance due to this move right here, and it frustrated me. I was really, really annoyed by that. Whose fault is it? Always take the blame for everything in your trading. It will serve you better in the long run. We bounced back just fine. I had a remarkable trade following that in the ticker symbol SMH, the ETF for semiconductors. NVIDIA, Taiwan Semi, those things absolutely ripped higher. And I was fortunately able to catch a trade that made back all those losses and way more. But in the meantime, did that drive me insane? Oh, I was so mad. I was so mad that day. There's a possibility that James and Chandler remember that. That day I was so annoyed at that situation. I mean, I think it cost me it was an ugly amount of money. It was an ugly amount of money, and I was so pissed, to be completely honest. But I wasn't, even in that moment, I was like, I've done this long enough. It's just annoying that that's going to happen. And that was a moment, I think, that stands out to me in my trading career, even in the maturity of my trading career that it's at. I've done this for a long time now. That was still, and Chris Pulver, by the way, too. Him and I had the same conversation. He got knocked out by some slippage stuff on that Monday too. And also I think he did a whole bunch of stuff on options that really cost him. A lot of people, I think, that day got really frustrated with slippage. And so, yeah, I mean, that was a learning lesson. But also sort of the cost of doing business. If you're going to trade ETFs or options for that matter, because you have to have the live, unless you're actually, I don't know. This is a question for Chris. Chris, quick question. Thumbs up or thumbs down. I was talking about the August, he can hear me. He can see me in the back end. On that August 5th day last year, I think we both were super frustrated with slippage specifically. Can you trade futures options at that time, or do you have to wait for the stock market to open up? Yes, you have to wait. Okay, no, okay, yep. Gotcha. Anyways, I'll talk to Chris about that in just a second. We're gonna play a quick break here. We're gonna bring on Chris Pulver, and I want to ask him that question, and then I got to run after that. So after this, we'll speak to Chris about that situation.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
All right, Chris,
ask that question again.
Yeah, okay. So this was the reason I was discussing that was somebody in the audience outside of the United States asked, what's the best way, most cost-efficient way to trade the indices and to hold something for, a holding period? Because obviously if you're trading CFDs through like a CFD brokerage, that can get costly to hold positions for, 3 weeks, 6 weeks, whatever. So I was talking about the pros and cons of everything. And I personally trade a lot of ETFs. I swing trade ETFs. I know that there's people who like to do futures, there's people who like to do options. But I was talking about the pros and cons of each. And I talked about one of the big cons is that with ETFs, you don't get access to the market until the stock market opens up, right, which is a major negative if you have something like an August 5th event. So I think we both dealt with a lot of slippage. I was talking about how frustrating that scenario was. I gave back a huge amount of my profits just on that one day for the year. Ended up recouping them, which was great, but it was a very frustrating situation. And I was asking too about options because even the futures market gapped lower on that August 5th day. What was your scenario like with that?
Well, what it did was it blew open the bid and ask prices. That was the hardest part. So even trading it live, um, this is actually the gap open from Friday the 2nd, which was a non-farm payroll day, to opening up Sunday night at 6 p.m. This is what you're talking about the
Mm,
market doing. So this is a run literally Sunday night. The market was down 4%.
I remember
So
that.
you're talking like in a 3 to 4 hour window, we essentially had the market blowing open, and we were looking at 3, 4, 5% gaps lower on the opening bell indexes. So your SPY, your Qs, your ETFs you're talking about, they were going to be gapping like 3 to 4% lower. Futures was insane that day. I know because I was watching. It was Sunday night, 6 p.m. The market was way down, and I really took notice around like 9 or 10 p.m. Eastern time that night. Um, and so the crazy part is futures would have been the best way to trade it, but your bid ask would have been quite wide, like
Okay.
probably 3 to 4 times wider than normal, if not worse. So because it was, over the weekend, Sunday's usually pretty quiet, but a Sunday open like that was insanely violent. The markets were going from I don't even know what the VIX was at the time, Nick, probably like jumping from like a 20 to a 40 VIX,
Yeah.
because
That's insane.
that was literally like a volatility event. We went from like a 20 to 60 VIX.
Yeah. Yeah.
So
I pretty much I guess my frustration, especially with that situation, is because I wasn't trading futures.
mhm.
In the big picture, 3 weeks later it didn't make a difference if you had just
True.
held through all that, which
True.
I did not. So I
Yep.
actually took the loss, which sucked because eventually, basically, when the ETF opened up, it was like right towards the bottom of the move, and then
Correct.
it ripped from there. So it was frustrating. I mentioned I was able to recoup the losses through some other trades, which was great. But in that moment, it was very frustrating. And so then my other question to you was, so with futures options, I'm not
Mhm.
super familiar with trading futures options. As everything I trade in terms of options is ETFs and individual equities. So with futures options, are you able to trade like Sunday night options? You can. Okay, so you can.
Yes.
Okay.
Yep. You can start as soon as futures is open. You can start placing trades. I've done a lot of futures options trades that it's easier to position like a Sunday. If I wanted to start Sunday night and like prep for the week, I can just put on a trade on Sunday anytime.
Okay.
Usually I just wait until Monday just because we have some, order flows that come in Sunday nights, and Monday's kind of like the official opening bell. But the one thing that's nice about futures and futures options is you get the convenience factor of you don't have to trade opening bell, closing bell for I mean, it's for anybody, but like a non-US trader, especially. I mean, I have traders that I know that are in Australia, that are in Singapore, that are in Europe, and they're 12 to 7 hours ahead or behind or whatever. Like the time zones are awful. So a futures market that runs 23 hours a day, you can still place similar strategies and mechanical trades using futures options. Like I could place a trade on Sunday that expires on Friday. That's
Okay.
not a bad trade to kind of give myself a run for the week. So example would be, let's fast forward to, current price. And let's say that I think this week, and here's actually I mean, this is a trade that I actually want to kick around. We're kind of starting earnings season officially this week with a lot of
Yeah, that's
financials.
JP Morgan. Yeah.
Yep, it's JP Morgan, Citigroup, Goldman Sachs. Netflix is out there on Thursday, which is maybe one of the bigger volatility ones to kind of keep an eye on. I was going to
Hmm.
fast forward to today. I think a really key level, there's a lot of resistance around 6,300. Like as far as like the SPX at 6,300, that's a huge level this week. And I think that as we just kind of melted up through the last OPEX cycle, like through the end of quarter, end of month, all this stuff for June 30th. We just kind of breached like 6,000, ran up to 61, 62. We're kind of hanging out here. What's interesting, Nick, is this expiration for the 18th, which is a major monthly expiration. It's like 90+% call option volume.
Mm,
So, and it
interesting.
could be like buy calls that expiring, but I would also imagine a lot of people are selling calls to just take profits at some of these big pops that the stock market has seen. Um, there's not a lot of put protection. You can look at the pricing in the market right now. Let's go to ES for futures and see if this shows the same type of skew that we saw in SPX or SPY. If I go to a futures options trade right here, and I'll just guess. All right, so I'm going to go out to the 18th and say, okay, I think by Friday, this week by Friday, I don't think the market's going to be above the expected move. So right now, futures options for ES, I could do some type of trade like let me do a call fly here, just see if I can get something to pay me. So if I were to say, let's go down to the expected move around 63.70 or so. If I pin the expected move and give myself a little credit here, so I can risk about $400 to make about $100. And
Mm,
there's a profit trap there. So it's a little backwards, but that's an out of the money trade that says the S&P futures market will be lower than what's the expected move.
mm.
So if I put a cap on the ceiling or the cap on the other move this week and said there's a ceiling, I don't think we're going to go above this. That's not a bad way to look at it. And I could set this trade. I could have set this trade Sunday night and let it go all the way for Friday's expiration.
Sure.
Make
Well, there
sense?
you go. So for people who are outside the US, especially with the limitations on ETFs for certain places,
Yeah.
probably the way to go is if you're somebody who wants to hold indices for a longer period of time, or you're interested in doing the option side of things like Chris gets into, futures and futures options might be the way to go. I think actually, just generally speaking, futures they're highly liquid. They're a great way to go in terms of if you just want to be long SPX or short, NASDAQ, whatever. I think that's a way to play it. Chris, I'm going to back out of here and let you take over for a little bit. Before I hop out, just for anybody who enjoys the commentary from Chris, make sure to find him on his own channel. He has a YouTube channel. You can find him, Chris Pulver. Just search him up on YouTube or socials, and you can find him all over. And of course, if you want access to his trading signals, they are also available inside of our group with the Pulver Alerts service. If you have some questions about that, feel free to explore the Pulver Alert service here. Chris, thanks very much for taking over the show, and enjoy it, man.
All right. Thanks, Nick.
See ya.
Bye. Just one quick thing on the option stuff. If you do sign up for Pulver Alerts, you do have access to a bonus course called Practical Options, and it is 13 of my favorite option strategies. They can be also thought of through the futures market as well. So taking a bull call spread or a bear put spread or a bear call spread. Anyway, debits, credits. Here, I'll just show you a quick sneak peek. So this is where I usually let's go to practical options. There we go. So this is the bonus course right here. So usually I'd sell this course for $497. This is included with Pulver Alerts. So if you get Pulver Alerts, you get my alerts. I give you this practical options course. You can see here, like, as an intro on just going through the entire strategy guide. I have a PDF that goes with this that I walk you through key terms and vocabulary. A lot of times the learning curve that comes with learning options is just the terms. What is a call, what is a put, what is a debit, what is a credit. The Greeks, like some of the things, like it just means if price is moving, that's a delta. If it's time, that's theta. They're stupid names, like all the stuff that comes with options and terminology. It was created to sound really smart. It's really just understand, if I'm taking this trade, what does it mean? So that's why I'm literally like breaking this down to the simplest details of practical options, meaning this. Do I know what the trade means? If I, buy a call here, what does that mean for my trade? What can I risk? What can I make? If I create a spread trade, what do I risk? What do I make? Where's the line in the sand for risk or reward? So I break that down in hopefully the simplest details here. Break through a risk graph as well, or walk through a risk graph when things show up. I mean, for example, if I did that I was doing a butterfly spread as an example. So if price is here on the the ES, will go futures. Price is here, and I wanted to position myself. So I'm going to say the market can't go greater than 63.70. Okay, so I can make a trade that looks something like this. There's my credit. There's my profit trap. There's my risk, and I can build a trade where I get paid here. If price goes nowhere, I still get paid. If price goes down, I still get paid. If price goes up, I still get paid. If price goes up a decent amount into my profit trap, I still get paid. I have, some risk, obviously, if price goes too far to the upside. So maybe it does. So I take risk, and I'd risk $400, but I can make $100 here, and I can make about $300 here. And I'm giving myself about an 80% probability profit on that trade for Friday's expiration. So that's what a risk graph looks like. And sometimes it's just a little confusing to see it. So I try to make it really simple. Looking at an options chain, most brokers are the same. I mean, you can look at a Tasty Trade Broker. You can look at Thinkorswim. You can look at E-Trade, Fidelity, Robinhood, Webull, whatever. All major brokers like stock brokers, equities, indexes, futures, like Interactive Brokers, same thing. Option chains are pretty much the same. You have your underlying asset, okay? You have your um, expirations, you have your strike prices. So once you can navigate kind of one option price or one option chain, they all kind of look the same. Strategy guide, and then the strategies here. Buying calls, buying puts, bullish spreads, bearish spreads, calendar spreads, butterfly spreads, and these are all directional trades. Then you have also non-directional. So I'm trying to give enough guidance and material to say whether you want to trade the market up, down, or sideways, there are strategies here in this practical options. So I say all that to say, if you get the pulver alerts, this course is included, right? And I'm hoping if you really want to do even a basic dive into options, you can take in a lot of information here and be very, very knowledgeable with getting started and comfortable placing options trades, understanding what that reward and risk is at all times. The nice thing, actually, I ran this test this morning. I thought this was interesting. So I just ran a morning session. We were talking about this. Can everybody see this right here? Okay, this didn't happen. And I know that because the way that I trade in the morning, everything that I'm doing for options is risk defined, okay? Which means the trade that I would have been taking in this example would have been something like I would do like a 15 wide on the top and a 15 wide in the bottom. So let's say this is current price of the asset. So I'm trading SPX as an example. So if this is SPX price in the middle, and I create a spread up here and I create a spread down here, the most I can lose on this trade is if I did a trade for, let's say I get $2 credit. Okay, that means that I'm risking $13 in risk. And you might think like that's crazy, that's so much risk. Well, when you win 97% of these trades, you can still make money. When you win 81% of these trades, you can still make money. So this is the strategy that I do quite a bit, and I do win about 90% of these trades, so it's quite profitable. But it's typically not a favorable reward to risk. And some people have a huge um, reluctance for trades like that, and some people can't ever wrap their head around like trading backwards reward to risk. But it's all about probability. So point is, I know that if I took this trade, my max risk would have been about $1,300, and so this max loser was showing 24 grand. The day that that showed a $24,000 loss was April 9th. Okay, April 9th of 2025 was the day that Trump said, great time to buy stocks, and it was the Trump pause and the Trump pivot, right? We put the 90-day pause on, and what did the market do? It had one of the biggest rips we've seen in 20 or 30 years. This trade is still risk defined. There's no way that I would have lost $23,000. So I still took the bulk of the loss. I took a $1,300 loss, but this went from a P&L of negative 15 to plus $7,500. So it changed everything about the test. So even that is an outlier. And I looked at the data, it's like April 9th, if I placed a trade that day. Now, granted, we would have had like pretty wide bid ask prices because that was post Liberation Day. It would have been April 7th, would have been like the big dump for the day. And then April 9th was like 2 days later, the market rips on. I think it was had to be a Wednesday. I'm pretty sure it was a Wednesday because like that Wednesday or Thursday, the next day, like I was traveling. That was like during the Masters week. Um, and if it wasn't for that day, if it wasn't for the market ripping up the way that it did, I probably wouldn't have been in Atlanta that day that I hung out with the A1 team and tried to actually enjoy the rest of the week and not feel like my year's going to crap with everyone else's. So anyway, but the nice thing about options, it was just a long way of saying you can trade risk defined. So all option prices is you have a price and time. That's all it really means. Okay. And over that price and time that you select, you're either going to make money or you're going to risk money. And so I like to have trades that are risk defined. So even if the market were to go to zero, which we know is probably never going to happen on the indexes or the markets, right? Or time obviously is going to pass regardless. Like there's no way to stop time. So price goes up or down and time is going to come to an end. My expiration is always going to come to an end. And at some point, I'm either making money or I'm risking money. And all it is a game of price, time, and if price is above a certain level or below a certain level, I either make or risk dollars. And you can make that as huge as you want, or you can make that as small as you want. And I tend to trade in that kind of sweet spot where my risk and reward is pretty comparable. If I'm going to risk, $500, then I'm looking to make hopefully $250 to $500 with a high win percentage. If I'm going to risk $500, maybe I can make $750 to $1,000. It's no different than anytime you look at a futures trade or a Forex trade and try to say, well, I'm going to go after, I'm going to risk $500 to make $1,000. Cool. You can do that in options. But the nice part about options is you don't have to deal with all of this stuff that drives me crazy as a Forex trader that's been doing that for 17 years. And as a futures trader that watches the market manipulate highs and lows just like it does in Forex, which means if I placed a trade, let's say that I wanted to short the market. And how many of you have had this experience in futures or in Forex? Okay. If I were to sell right here, okay, and put my stop loss right here, what happens if price does this? Spike and then down. You get stopped out. You lose money. And the broker takes that money, and you're out of that trade with a loss. And then the market goes the way you thought it was going to go. Okay. That is manipulation that happens all the time in Forex, in futures. Options, you eliminate that. Why? Because if I were to place a trade, crafting a trade that says if price stays below this line, I make money. And price can go here and 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 here, all over the place. My stop loss doesn't matter until expiration. So I could sit in this trade for a week. I could sit in this trade for a day. I can sit in this trade for 6 months. As long as price is below here by expiration, I get paid. If price is above here, then I risk. But there's no manipulation in an options trade. It's just price and time, right? That's kind of a good thing. That's why options to me are incredible. I think it is a very fair tool for retail traders to consider because you eliminate a lot of the frustration with getting trades right on a chart, but somehow losing based on a high or low that's being manipulated and tested over and over and over again. Type in a wire yes if that makes sense. Okay, so if you're interested in learning more about options, I think jumping into the Pulver Alerts, soaking in that practical options knowledge, and hopefully it helps. It'll be just a really quick crash course into introducing you to options, giving you some of my favorite strategies, and then thinking about the market in terms of where's my line in the sand, where's my reward, where's my risk, and then letting trades play out. Not that difficult. Okay, so there to help. All right, let's talk top down here. I have a hard stop at 11 o'clock today. So let's talk some macro. This week earnings, we kick off. I think I have a screenshot right here. This is kind of the earnings play for the week. Big financials, a lot of it's led by, JP Morgan tomorrow morning, Citigroup, Wells Fargo, BlackRock, State Street, BNY. Let's see here. We've got some transportation with JB Hunt. We have Morgan Stanley this week, also financials, Bank of America this week. What are some non-financials? We have United Airlines, Alcoa, Kinder Morgan. We have Pepsi, Travelers Insurance. We have Progressive this week, I believe. Progressive Insurance, I thought. Yep, Progressive here is Wednesday morning before market. Netflix on Thursday after the close of Thursday afternoon, 4 p.m., whatever, when it's announced, and then we'll see Friday trading on Netflix, whether it's an up or down. If I take a trade on Netflix, I'm likely going to go out not this Friday, but the following. Because I don't know. Netflix can surprise us a lot of different ways. The market might love it. It might move way beyond the expected move. So I'm pretty cautious on some of these like highly sensitive stocks when it comes to earnings. Interactive brokers, kind of the trading business. I think for stocks like Schwab, Interactive Brokers, Robinhood, they've been doing really well this year. Robinhood especially is kind of off in its own island with like tons of upside, and a lot of people are crazy bullish on Robinhood right now, which good for them. I'm still, a little, I have Robinhood exposure. I was annoyed for what happened with them in 2021 with GameStop. And I did lose a lot of respect for them. But, I know, give them a chance to come back and make a presence in the industry, which they are. I believe they've been a great disruptor. I think if it wasn't for Robinhood coming into the space of trading, we wouldn't have free ETFs. We wouldn't have fractional options. We wouldn't have Acorn. We wouldn't have like all these things that are just like, look, make it easier for people to invest. I think Robinhood had a lot to do with that. On the negative side, they were pay for order flows and they were democratizing, and they said it was for everybody when really they were still getting paid by big pockets like Citadel, to basically pay for order flows. And when everything happened with GameStop and Melvin Capital, that was the whole thing where they froze their platform, turned it to closing only. You couldn't buy more shares of Robinhood. It was just a stupid week, but obviously there were days and days and days of nonsense leading up to that freeze. So I had a Robinhood account. I have friends that had Robinhood accounts, and I was actually saying, this is a good time to move stop losses. This is a good time to take profit. This is a good time to get out of this trade. This is one of the crazier things I've been watching for a while. And sure enough, just a few days later, it was frozen, can't do anything. And all of a sudden you have 60, 70, $80 gaps to the downside, and people are watching all these profits disappear. So I did lose a lot of respect for them. I closed out my Robinhood account right after that GameStop debacle. And it's fine. I didn't really look back. But as a stock now, I mean, Robinhood has been pretty exciting to see rip from the teens. I mean, they essentially became their own meme stock. I mean, they're trading at $11 back here. Here's the drama here in 2021. They IPO, or I don't think they SPAC'd. I think they IPO'd, but became their own meme stock, right? They open up at 35, rip up to 85, and then flush down to just nothing. Like Robinhood's garbage, $10 a stock, $9 a stock or share, and now they're up to $100. So it took time, but that's just that big trough, and life goes on. So, what do I see now in Robinhood? Overbought conditions with divergence on the daily time frame. To me, most likely mean is something that we should be able to fade. I think we should be able to fade this move and see some success there. Okay. Let me ask C's question here. X says, great talk about options. New looking to learn more about options. Yeah, I mean, a great spot to learn is grab your pulver alerts, get the practical options course to go with it. So that comes with the A1 Trading Pulver Alerts bundle. I'll give you this course. If you just want the course, you can have it. It's there's an on-demand page here if you just want the course. So that's the full options course. I also have this. I have one that's also a little bit more bite size. Let's go practical options. I've got a quick options course for $27 if you just want to just test the levels of options. Okay, here's a quick guide here for about $27, and it's just basic option strategies, but you can still trade the market up, down, sideways, understanding there's time and price that's really all to pay attention to. So if interested, there's this, but like I said, I include these with the pulver alerts with A1 Trading. So, if anything, get your EdgeFinder, get your pulver alerts combo, and get the practical options included for no added cost. But if you want to just buy them a la carte, they're there. Okay. But that's, again, to me, I taught that as if I built that course kind of like my nephews were in mind. I've got a 17-year-old nephew, 19-year-old nephew. Hey guys, you want to learn some options? Hey, I've got clients that are, 70 plus years old, 80 plus years old. Just to understand a basic, it's like some clients that I trade for, they still like to kind of manage a few bucks on their own, but just to have some fun, just to learn a couple things, give them a couple strategies, express something in the market without taking on a lot of risk. So I give them a course like that. I kind of built it out for something very simple, get rid of a lot of the learning curve confusion that comes in with all the terminology, looking at a risk graph. It sounds so sophisticated. All these strategy names are so crazy. What's a jade lizard? What's an iron condor? What's a broken wing butterfly? Nobody cares. All you have to do is understand, what is the trade telling you? Where's my risk? Where's my reward? What does it all mean? Can I plot it on a chart? Everything else is it's just funny stuff. So simplify it. All right. Okay. Currency strength for the day. Let's have a look. So today we've got New Zealand and Aussie week. Things are still pretty quiet on the Forex side. I really haven't seen a big Forex day in a while. I can't tell you the last time I saw 100 plus on the vertical axis here in anything Forex outside of maybe the Japanese yen or the pound in the last couple of months. It's been pretty tight. Even the dollar, which I said, look, I'm not selling the dollar at these lows, which so far I've been right. I think that the dollar, having a little bit of a pullback off the symmetry zone makes some sense. I still think even at 97, almost 98, the dollar is still likely going to pull back into 100 or 101. If we have some risk off trading in the market, I could see bonds catching a bit of a bid. I could see the dollar catching a bit of a bid if the market is likely going to pull back. So, how high does the S&P go? I think at the very least through this first week or two of earnings season, this week is all financials. We'll see some forward guidance. Next week, we're going to start to see some Mag 7s dripping in here towards the end of the month. I would love to see This is a 21 period moving average. This is a 50-day period moving average, then a 100, 144, 200. This is all supported. Even a move back to the 21 is supported. It's shallow. It's aggressive. This will still be a very aggressive bull market if we bounce here off this 21-day moving average, like previous all-time highs. We bounce off the 21-day and come up to these highs again. Do we have room to get higher? I personally think that we can at least make a run back to this 50-day, which puts us around 6,000. I mean, we're trading at 62.51. We had highs here around 62.90. Can we get back down to around 6,000? Now, this might be seen by some as a line in the sand that's really important. To me, this is still support. This is still support. This is still support. The big break for me to be like, okay, this might be a little bit more of a concern would be if the market convincingly breaks below 57 and stays below 57. That's where I would say, maybe this market is setting us up for like a monster top. Okay. But if we fall into this 50-day moving average and we stall a little bit and then fall a little bit more, as long as we pick up some support around this 5,700 handle, I think this is allow the market to find a base, allow the market to work its way back out. We try to hit all-time highs and kind of run into the end of the year. So my pullback window is kind of now until September. I know that's a big window. I know that's not going to help anybody that wants to trade short term, but to me, that's a big enough window to say I think we should technically have a decent correction in the next 30, 60, 90 days. If we don't, I would be shocked, because if we don't have really a correction, what's next? If we don't have a correction, there's only two things that can happen. We either go absolutely nowhere for the next 60 to 90 days, which is also a possibility, although rare, it's still a possibility. Or the market can somehow just keep grinding higher, slowly, but grinding higher. Okay. Is the market capable of blowing the top off? Well, of course it is. My concern is if we have a blow off top, which I thought this kind of was a bit of a blow off top to me after that ceasefire agreement. That ceasefire was a bit of a blow off top after the market was, kind of just grinding towards all time highs, and then boom, blows through it. Doesn't really even acknowledge 6150. Didn't even pause at 6150. And here we are, 100 points higher. So if we grind a little bit higher, okay, fine. But at some point that structure changes. We still get a pullback. All these moving averages are still going to get hit. They'll still get hit. So I'm just a little bit more cautious in the short term, waiting for dips. I hope we get something. I mean, I'm willing to wait 30 days. I'm willing to wait 30 to 60 days. I think by the end of September, this market at least has a pullback that I think we could position for. So, like I said, cautiously bullish. Like this trade up here, this is a trade that on an options chart looks like this. So I have a buy call and then a sell call and then a sell call. So what that means is I'm looking at a price where if this is price, it can go all the way up and increase in value by another 5 to 6%. And if it gets up to that level, I have a little credit here, I have a profit trap, and I have some risk. So price can go nowhere and I can still get paid. Price can go up a little bit, I can still get paid. Price can go up 5+% on an index, I can still get paid. Price can obviously fall and fall and fall, and I get paid. So that's a trade that I'm in, kind of defending the time of like August and September. I think by that window, price has at least made a pullback here, and that trade should get me paid. So that's one way I'm doing it. We'll see if it plays out. So I have about trying to think, I'm risking about $800 on that trade. Max profit could be, I think, around 700, about $700 if I'm right. If I'm like spot on, it'd be about $700 in profit. I'm expecting to win about $390 though. Just the higher probabilities I win about $390. But I'm risking about $800. Okay. But I think we still have a pullback at least to the 21 period, more than likely because of the point differential, and we haven't seen the markets push this aggressively above a 50-day in a long time. I think we at least pull back to the 50-day. So that's not nothing. Like a 250-point drop is going to get some attention. I mean, that would be a decline of about 4%, give or take. Obviously, the 50-day moving average will catch up, and it might decrease that decline a little bit. But I still think we have a reasonable, 3, 4, 5% pullback. If it becomes a little bit more than that, just like we had back in July last year, market went down, stalled, down again. That was about a 9.9% correction. Okay. So we can get 5 to 10% reasonably in the market, pullback wise. And it doesn't really change the integrity of a bull market at all. right? It's when you start to get 15 to 20%, like you saw here, where everyone thinks, oh my God, the market's bearish. Well, obviously there's reflexivity to the market too, as illustrated by what happened post, April 9th. So I'm looking at some type of correction. I don't know what the catalyst is going to be. The market might be doing the old buy the rumor, sell the news August 1st, because now that's supposed to be the big bad tariff deadline. The tariff talk isn't over. I mean, the Trump taco trade is okay. So we want to tax Canada. We want to tariff Canada. We want to tariff copper. We want to tariff Brazil. I mean, we're still talking trade war stuff again. So it was quieted here, and it's almost as if Trump gets a little bit more brave at all-time highs to say, look, I'm going to throw out some tariff conversations here, right? Why? Because we're sitting at all-time highs. What could go wrong? We have some support, right? We have some insulation to kind of cushion this blow. But when the market was down here, he was very quiet. Like, shut your mouth, dude. You're going to break the market. So we pivoted. But it just seems like it's a little bit braver here at all-time highs when the market's showing that the U.S. is resilient, and all of a sudden there's an understood kind of cushion where it's like, if we don't tariff the world by more than 10, 12, 15%, I think the markets are taking that in stride. It's the shock tariffs like 25, 35, 50 plus percent that just seem completely subjective, that the market doesn't really love. But there hasn't really been like an adverse market move here for the last couple of weeks. Yes, I mean, last week we closed lower, but barely. I mean, this is where the market opened for the week, where the market closed for the week, like a fraction below it. It was barely negative last week. Okay. So is this a sign of a top? I don't know. I mean, we had a nice little run up through that trade war. This is the ceasefire agreement. So the US-China trade agreement gap was back here. That's still alive and well. Here's the ceasefire agreement where the market ripped up, and that was kind of our two big thrusts in the market the last couple of months. Now that we are kind of stalling here, I still think 6,300 is a key level this week. Honestly, I'm looking to kind of fade off of 6,300. I don't think we go too much higher than 6,300, in all honesty. I really don't. But to me, the safest way to play that is not to express that as in like, it's got to stay below 6,300 this week. I mean, what I'd like to see is for a given week, as far as like day-to-day volatility. I mean, in a given week, we're looking at a VIX around 16 or 17 right now, which means the market is expecting about a 1% move plus or minus every single day. So there's enough volatility to potentially, and it's rarely going to happen, but potentially have the market go about 5% plus or minus for the week. Okay. So if we went up 5% from right now, 5% up right now is going to put me up into that like 6,500 zone. So current price go up about 5%. So we'd be at 6,550. Okay. If I show you this on an options chain, let's go out to the SPX. Let's go to the end of the week, July 18th, and let's see what the broker says. Well, the broker has here based on current volatility, current IV rank, current plus or minus market maker move. The broker's looking at about a real move about 6,320. That's on the high end of, that's like a 20 delta. So there's about an 80% chance that price stays below that. Okay. So that could be my way of expressing this week how to stay out of trouble. Is if I look to sell, it's like I'm selling above 6,300. I'm trying to sell above 6,325 or 6,350. I don't think that price is necessarily built in this option chain to go higher than that, right? The famous saying is bulls climb stairs, bears jump out of windows. That's my saying. Like a lot of people say bulls climb stairs, bears take the escalator or the elevator. I'm like, the elevator is silky smooth. Like bears just jump out of windows because when the market falls, it falls aggressively. So anyway, if we're going up, it's really, really slow and steady. If we go down, it's like just a rip to the downside. It's all about shock and how quick things are moving, and then volatility changes, bid ask gets super wide, and it makes trading pretty disruptive, right? So anyway, I think it's pretty safe to be selling above 6,300 this week. And honestly, selling above 6,300 for the next couple of weeks, because unless I see price really convincingly making a run above 63, I think we have some room to pull back. So to me, that's really going to be my focus. I think we don't see price going too much higher than like 63.50 or so. And again, if I'm wrong, it'd be defined risk. I benefit from market melt up. You know, I've been hitting fresh highs in the portfolio with this melt up. We've had a nice run on silver, which has been a nice position for me. We've got a nice run on Bitcoin. Bitcoin's up 13% in the last like 4 or 5 trading days. It's up to 119. That's pretty exciting. Now the question on Bitcoin is, where do we stop? Does Bitcoin go to 120, 125, 130, 140? I mean, I don't know. It's kind of exciting. I'd expect there to be a pullback at some point, kind of retest some of these key levels. Okay. So anyway, but I just think technically speaking, it is more technically likely to have the market just try to retest, try to go sideways and let these moving averages catch up, or try to pull back to find them. If the market pulls back to find them, there could be dip buying. Okay. But that at least gives us a chance to buy something cheaper. If the market melts up a little bit, I mean, what do we have going on this week? Earnings. We're just kicking off earnings. Is this the type of earnings that's going to send the market sky high? Probably not. Financials are usually pretty boring. They're usually pretty low beta. If you go to XLF for financials, we're sitting on this sector at all-time highs, just off of it. So do I think the guidance will be like amazing on financials? I mean, they're probably excited that rates are going to be cutting, right? I mean, the Fed's expected to cut rates 2 times this year, maybe 3, but it's like 5 to 6 cuts by the end of 2026. What other drama do we have going on? Trump and Jerome Powell, right? I don't know. I mean, I hope for Powell's, like, his legacy's sake, that he just holds firm. I really like. It's fine if the Fed wants to cut 1 or 2 times this year. I think the most important thing for the Fed cutting rates is that they do so and the bond market doesn't react adversely. That's the most important thing, because if the Fed cuts rates and the bond yields go up, that's going to be the same story that we had before. Yields are higher, growth is slowing. Even if we're cutting our way through it, the bond market is telling us something different. And there, again, another good saying is, deficits can continue to grow until the bond market takes away the keys. So we can have a government that's just spending recklessly and adding to the deficits, but the bond market says, look, man, we're going to increase yields by 50 basis points. We're going to increase yields by 100 basis points. This will cause our reality check in the markets. It did last September, and we did through Liberation Day, and we are looking at maybe global yields continuing to rise and stay elevated. This is why the Fed doesn't want to cut. They don't really want to cut. Inflation still hasn't hit sub 2%. They don't want to cut, but the pressure is mounting, right? Because if they are truly behind and we have this ability to navigate a soft landing, and still the labor market is steady. But it's an interesting correlation, because usually when the Fed starts cutting rates, yields should follow. But last year that broke. And so I wonder this year, will the bond market still be like a rebel? Will it be like the bond vigilantes and the rebel? Maybe. Because if that happens, I think that we're just going to head into either an asset bubble or some type of stagflation that is not going to end well. And this market might, I don't know, man, this market might have this weird Trump 2.0 mega bubble. And his legacy is, look at what I did. I created the greatest market in the world. We're at all-time highs. Everyone's happy. Everyone's got all this money and wealth in their investments. And then it all comes crashing down with a 30, 40, 50% correction. And it's not on Trump. It's the next president, right? But it's all these things that are being created, policy-driven, a decade of irresponsible fiscal spending, which started with Obama and started with Trump. Even though Trump was, the disruptor, it still increased the deficits. It still was heavy fiscal spending. Biden took that to an extreme through COVID, 2020 to 2024. That fiscal policy really kept the markets churning along through a bull market in 2023 and 4. Long story short is, you got to watch the bond market. You got to give it the fair credit. Bond traders, probably some of the smartest and most sophisticated traders in the world. Although I would say, if you're just holding bonds, I think it's a terrible trade. The one thing I'm probably the most concerned about as far as a black swan event would be some type of break in the dollar or a break in the US bond market. TLT again is just not really catching a bid. I know you can trade bond futures. This is something I see a lot of good traders doing right now. Is every time they're coming down, they're just taking nibbles, and just you're either selling premium and trying to grab some scalps, or you're buying lows and you're trying to grab some scalps. This is a very stable market right now after the disruption through Liberation Day. This was the basically the April 7th, 8th, 9th was when the market got really disrupted on bonds and yields. And that was when the Trump administration pivoted very hard. So I don't see the bond market necessarily going, too much lower in a violent way. But I just think that if we hold these levels, we have some bids, but now the question is like, how bid does it get? Do we have like a squeeze in bonds? Remember, this is bonds. Do we have a squeeze in bonds coming, or do we have like yields go up and bonds continue to go down? So if TLT goes lower, presses lower, it doesn't look like it'd be too much lower than maybe $80. You can go back to like, I don't know, to early 2000s. Yeah, so this is 2001, 2002. TLT was down to like $81. So it seems like a no-brainer trade, like, oh, just buy TLT, And then what happens? What if it breaks? What if that's not the floor? So I'm like, that's my caution this year. Something snaps in the dollar, something snaps in the bond market. It's very disruptive to equities. And the cycles happen so much faster now that it's silly to make these like big risky bets. So I'm not. Okay. All right. Like I said, I got a hard stop here in about 2 minutes. So I didn't have a chance to go like super top down, but at a glance, S&P is flat in the day. NASDAQ is clinging to some gains. Dow is flat. Russell is up a little bit. Volatility has jumped up from, last week we had lows in the VIX around 1570. Now it's up to 17. Dollar index still catching a bit of a bid off these lows. So I'm not selling the dollar. I'm waiting for the dollar to kind of work its way into like 100, 101 again before I start looking to fade the dollar. Oil still pretty good support at 65. Natural gas, I might be adding to my diagonal spread here. 1650 out to August. I'll watch that one. I'm going to set a chart alarm here at 1650. See if that's going to get called away for some income. That's out to August 1st. Gold, still waiting for some pullbacks into my 144 200 moving average. Silver, nice little pop to the upside. Good spring. I still think silver is very well supported at like 37, 36, 35. I'd like to buy some dips on silver. I might look at a futures trade actually, get a futures trade on to see if I can like keep it out of the way of these lows. Bitcoin up to 121 and change. We were up to highs at 123, almost 123.3. Measured move on Bitcoin up to about 132. So if I was going to be taking some profit, not a bad spot to do it, or at least buying some protection. All the above. Okay. All right. I got to run, hard stop, and let's come back and do this again tomorrow. All right. Thanks, everybody. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.